Welcome to TheoTrade. This is Don Kaufman. It's March 17th, 2018. Happy St. Patty's Day, everybody. Here I am doing the weekend update. Let's get started. Lots to kind of contemplate from this last week of trade, but we're going to be very forward-looking in this video. Obviously, because we have an FOMC meeting coming up this week. Hopefully everybody's aware of that. This is now kind of what I call, Fed 2.0. We'll come to that in just a few moments. Before we get into some of the forward-looking ideas, let's kind of recap some of the action of this past week. Again, I like to spend most of the time on these videos being forward-looking, but to recap, because many of you have a lot of the trades that we discuss on. In terms of profitable trades that we've pulled off this week, number one, late in the day on Friday, Walmart explodes to the upside. We had an in-out spread. We took it off profitably. Before that, earlier in the week, Boeing, we had a bearish spread on, and we pulled that out for full profitability a little bit earlier in the week. So the Boeing trade playing very nicely and pulling down the Dow. As you guys have know, I've been very critical of Boeing and been looking for some heavy sell-side activity. We saw exactly that this past week. Then we come to Tesla. It's actually one of the videos that I did earlier this week. Specifically, I set up the bearish Tesla trade by selling a far out of the money call spread. That was a 375, 380 call spread that was set up, about a month out in time. I'm already looking to close that profitably. I have not closed that one profitably, but let's just say, hey, that trade is on the dance floor to be closed. And last but not least, in terms of profitable trades this week, we'd have to look at the bonds. Now, many people are extraordinarily bearish on the bonds. That is, they believe that interest rates are going to explode to the upside. However, in the short term, I've actually been bullish in the bonds, and that's some of the action that we saw. So I rode a little bit of the bullish wave to the upside this week, took off a couple of profitable trades inside of the bonds. All right, now let's just get right to it. Let's start to move forward. There's a tremendous amount, I think, that you can expect out of this next week. First and foremost, if you're forward-looking, and we will look at the chart in this just a moment, I like to look at the expected move each and every week, specifically in the SPX. Again, last week we had about a $40 expected move, and we ended up inside of the expected move on the week. Now, that's the only time that's happened is, well, it's the third time, I should say, that's happened this year. Okay, so here we are already halfway through March. On a week-to-week basis, we've only ended up inside of this expected range. This is now the third time. Now, I attribute staying inside of this expected move primarily to that this was a monthly expiration, also known as, some people call it a quadruple witching. With all due respect, it's a triple witching, okay? So I attribute that to the amount of capital that was traded in the options in the SPX, and it really adhered to this $40 expected move. By the way, we closed right, to the bottom side of the expected move on the week. Now again, being forward-looking, we have a new FOMC kind of coming into play this next week. We're not exactly sure what to expect, and that's why I'm going to call this from here on out, update on the Fed 2.0. So in the SPX, volatility is slightly elevated this week. To what extent? Well, last week we saw a $40 expected move. This coming week, we're at about $45.50 and change. So we're seeing, again, just about an extra $5 of an expected move. But that FOMC meeting and the announcement comes out on Wednesday. I would anticipate that volatility is actually going to rise up a little bit between now and Wednesday. Now, why that's important is that if you're going to go out and you're going to sell options, those options, especially on a weekly basis, those options are not likely to see much decay prior to that Wednesday announcement. Now, as I said, I call this Fed 2.0. Everybody seems to think that what you're going to see out of Jerome Powell is going to be similar to the Yellen era, and I'm a little bit of the descending vote in that one. I think they have an opportunity here to change course, and I do believe that this Fed is going to get more hawkish. That is, they are going to impact interest rates. As I said, I just took off a couple of bullish trades in the bonds, and as this week starts out, I will be looking to flip some of those positions over and looking for some short-term bearish positions in those bonds. Now again, there's a lot of opportunities that are coming this next week. Let me take you over the charts. Again, we'll talk a little bit more about this Fed 2.0, and one of the things that I think a lot of people missed this last week, yes, the bonds rallied up, but the impact was specifically to the financials. The XLF fell relatively hard. And again, let's get to the charts. Let's show you, again, what happened a bit last week, but more importantly, the opportunities for this coming week. All right, let's get started with looking at the charts. What you are currently looking at here happens to be none other than a 30-day, 1-hour chart. So the reason I bring this up, and albeit very briefly, this is kind of the week at large. And if you're an intraday trader, you know, somebody that's sitting there, you're scalping either futures or stocks or options, people, this is the kind of marketplace that you want to see. Some of the opportunities we got this week happened to be some intraday reversals, and this was Sunday into Monday, rally to the upside. We fell flat on our face. Again, it doesn't look like all that much, but that's an intraday reversal. We did it again on Tuesday of this week, fell hard and fast. Again, big range. Threw off a similar range again in Wednesday, and we were left, well, a little bit wanting more come Thursday and Friday. But, you know, some of this chop trade that occurred here on Thursday and Friday was still great. We're seeing some ranges on the week. And as I said, for an intraday trader, oh, come on, that's all you can even ask for. I don't know about you, but I like it. So let's move onward and upward here. Let's go over to the SPX and let's examine some of the expected moves. As I said a moment ago in the video, that there's only really been a few cases where we did not crest through the expected move. And again, the expected move is what the options market is anticipating, okay, the market itself, in this case, the SPX, to move. So if you take a look at a few of the weeks, here's, you know, one of the weeks we did not crest through the expected move. All right, we had another week over here, okay, and last but not least, here's our third week. And again, we got close this week, okay, but closed pretty much right on the edge, and I want to zoom into this, right on the edge to the downside of the expected move. Now, the reason I'm bringing up this expected move, and I don't want to be, you know, in hindsight here, this is a $40 expected move. This week, we're heading towards the big leagues. So we're looking at about a $45 move, either higher or, again, $45 move lower. The point that I want to make with this is that takes us right into this range of 2,700 or 2,800. People, you could not be more in the middle of the range. In fact, when you kind of zoom out on the year for just a moment and you look at the year as a whole and kind of where we currently are, which is right here at 2752, yeah, that line pretty much bisects what we've seen over the course of this year, which is volatility to the upside, volatility to the downside. Where do we end up? Dead even, which doesn't surprise me at all coming into an FOMC that we really don't know exactly what to expect, right? Which I'll bring up here momentarily. Now, a quick kind of recap. As I said, had profitable trades in Walmart. That's because Walmart popped to the upside. Again, upside move inside of Walmart late in the day on Friday. Got us out of our positions. Then I bring up Tesla. Tesla, I talked about in a video earlier this week. We actually put on a bearish spread here in Tesla, and that is all the way up here at the 375, 380 level. Tesla saw some pretty heavy sell side activity. Again, that was the video earlier this week. You know, sell the spread in Tesla. Now, we are right on the dance floor for being able to close that Tesla trade. Next, we're going to come into none other than, let's pull up Boeing. And we got to go through a lot of underlyings here. Boeing, I've been just hypercritical that this thing is just way out of whack with the Dow. You have to recognize the influence that Boeing happens to have to the Dow. And this was a bearish trade that we put on quite some time ago, and it worked. Again, we exited for full profitability. However, I am going to continue to look for opportunity in Boeing, and this is going to be, again, forward-looking. What's the opportunity? I fully expect Boeing to fall flat on its face. I mean, this is a product where, let's just zoom out for a second, call it what you will. Boeing can legitimately fall, another $50, another $70, and it would still, for all intents and purpose, be in overbought territory. Again, that's just a 9-month chart. When you start pulling up like a 3-year chart, it just doesn't even kind of quantify it until, again, you pull up this 3-year chart and you're like, wow, this thing could head right back down to 200 and nobody would bat an eye. Anyway, inside of Boeing, again, being forward looking, I'll tell you exactly the kind of position I'm looking for. I'm expecting Boeing to maybe take a bounce. If it bounces back up anywhere near the 340, I'm going to go after it again and look for another short position. So that's something to ultimately think about. So we talked about Walmart, we talked about Boeing, we talked about Tesla. Let's get to the bonds. Now, where to go inside of the bonds? As I said, a lot of people have been hypercritical of the bonds, expecting them just to fall off into the sunset. I took a bit of a bullish position, and I got to tell you, my bullish position almost ran out of time here. We got a pop, though, this week up in the bonds, which alleviated me from that bullish position. However, as this week progresses, I very well may look for a bearish position now in bonds. Again, I had a short-term bullish, my longer duration position. Yeah, I don't think interest rates are necessarily going to explode to the upside, but I would expect the bonds starting to drift back down because, again, what I call this Fed 2.0, I think they're going to get hawkish, and I think they're going to change the tone, and I don't think anybody's necessarily expecting that. And the reason I say all of that, if the marketplace was anticipating a change of tone from the Fed, they would surely display it and widen out this expected move this week, and it's just not there. Now, along with the bond trade, again, I'm looking for just a short-term defined risk position in the bonds, and I'm very likely to take that in TLT. Stay tuned to TheoTrade throughout the course of this week because I will be looking to set up that trade. Now, let me cruise over to the XLF because the XLF is, kind of fell flat on its face this week. For those of you that are not necessarily watching the financials, the financials are really what led some of the reversals this week. Now, the financials are still up about 3% year to date, but we started out this week with the financials up about 6%. So what do you got over here? Well, those things dropped by 3%, which is, again, what I would term statistically significant in terms of a drop. The question kind of looms here is the financials, are they going to continue to see a slip to the downside? See, we're kind of caught in this big, catch-22, if you will. If the bonds turn around and sell off, and again, I want to paint the entire picture here so we're all very, very well aware, but if these bonds turn around and they start to sell off, that's actually going to take the rates, all right, higher. Now, higher interest rates are typically good for our financials. So the financials have tendency to benefit from them. Nevertheless, a major change or a policy change from the Fed could take these bonds lower and additionally cause pressure into the financials, taking them lower with. It's all about how fast these bonds are capable of selling off. And I got to tell you, this is like a little bit of a high wire act you're doing here between the bond market and the financials. This is like a dangerous game of chicken that we're playing. And literally the Fed is playing that dangerous game of chicken, kind of walking the fine line. If you raise interest rates too fast, you stall out the economy, you'll actually crush the financials. You want the interest rates to slowly appreciate. At this point in time, they've done a pretty good job. They halted, by some of the rhetoric they've used, they've halted the decline of the bonds, even bounced it back up. As I said, though, I think they're going to change that rhetoric this week. Now, a few more opportunities because people, again, there's a lot going on this next week with the FOMC. This is the kind of week where you really want to stay tuned to some of the updates and get live in the chat room with us because, as I said, this is going to be a fast-moving market. And, I'm listing the number of profitable trades that we've done, and there's a lot more opportunity out there. Let me get to some of the opportunity other than maybe just the financials. And by the way, last thought on the financials, you better be aware that this coming week, the financials, they're looking, and I want to highlight this because I think it's so important, they're looking for like almost a 62-cent expected move on just shy of a 20% implied volatility. Again, I would expect this implied volatility to even pick up as the week progresses. There's a lot of tension around what this FOMC announcement is going to be, and that's going to directly impact these financials, which they just fell again 3% on the week. So look for increased volatility in the financials. The reason that matters, if you're trading on an intraday basis, just got to cut to the chase, get to the intraday basis. The intraday trade in the financials that's what's been driving those S&P futures. And if you're not looking at the financials on an intraday basis, you're doing yourself an absolutely huge disservice. The financials, either rallying or fading, have been right at the forefront of the movement inside of the S&Ps in this entire last week of trade. All right. Now, as I said, forward looking, if the financials were not forward looking enough and talking about looking at them, this next week, let's get to technology. We got some issues here, people. So I'm actually going to start with Google, okay, and kind of move our way. A few of the major tech companies did see some fairly wild intraday reversals and some pretty heavy sell side activity. Normally this wouldn't even be on my radar screen, but Google, after this final ascent over here to the upside, which was quite spectacular. Again, you have to look at this on a year-to-date percentage basis and see the size of the move that this thing is throwing off. But this past week, Google's down almost 4%. If we start to look at Amazon, again, Amazon, was this a turning point in here? You can see that I'm actually working an order. I already have a number of bearish positions on inside of Amazon, okay? I'm a little uneasy about what the future holds here in Amazon. Nevertheless, I continue to take very measurable downside shots in Amazon. When I say measurable downside shots, okay, if you look at Amazon, and I'll zoom back out for a second, but if you look at Amazon from a risk reward standpoint, and you can use a 9-month chart, you can use a 3-year chart, but whatever does it for you. But if you look at Amazon from a risk reward standpoint, and we're going to take the assumption, just a quick assumption, that the marketplace is a 50-50 bet, okay? Whether it's going to tick up, the next tick up and the next tick down, a 50-50 bet out there. However, one of the things that I often think about as a trader is it's not just the pure 50-50 bet. I want to know what the upside potential is versus the downside risk. And at this point in Amazon, even if I think that Amazon is going to continue to rally to the upside, okay, the downside risk in here looks, well, pretty phenomenal. And I think that therein lies opportunity. There are relatively inexpensive, out of the money trades that we can do in something like Amazon. We can take a nice shot to the downside because recognize if Amazon starts to fall, number one, it's likely to take the entire Nasdaq with it. But number two, a fall in Amazon, okay, could be an incredibly fast and profitable one for you. So that's one of the things. Listen, if you're long Amazon, I'm not trying to persuade you to exit your position. I'm simply asking you, okay, to look at the risk reward and be objective in this case. Could there be another $100 of upside potential in Amazon? Absolutely. Anybody that doubts that, come on. All you have to do is look at the option markets in here. And if you look out, the next month, there's a $105 expected move. All right. So to think that the stock, of course, it can go up another $100. But okay, the capability of a fall in Amazon, like people, this is just an absolutely parabolic chart. And this thing screams the ability to fall flat on its face. And that is kind of a big question mark. As again, we just saw a couple of down trading sessions, but that's no different than looking at, some of the fall that we saw again, just a few weeks ago. So let's see if there's some follow through to this. Now, the interesting thing though about Amazon is, again, we're actually seeing some of the similar action inside of Google. Apple, okay, throughout the course of this week saw some sell side activity. All right. Netflix. Now we do have a bearish position in Netflix. Netflix completely stalled out after clipping a high of 333. Now, this chart doesn't look like much, but gain some perspective here. All right, this thing was, 333, let's just call it 334, all the way back down into the 320 range. These are some big time moves, okay, inside of tech, all of them which have been bearish on a relative basis this week. If you do look at the Qs, all right, the Nasdaq 100, I'm going to take you into auto expected moves, because one thing I also want you to see in terms of the expected moves, the Qs also closed right to the downside of what they were expecting this particular week. All right, so we looked at a couple of opportunities inside of technology. And again, in tech, the way to trade this, if you think that Google is going to continue to fall, if you think Amazon is going to continue to fall, if you want to take these bearish positions, for example, inside of something like Netflix, do it, okay? Small, very structured options position. Don't put a lot of risk out there. And, a lot of people are going to go into something like, Netflix, and they're going to look at the IV percentile, okay? And they're immediately going to say to themselves, I need to sell options in here. I don't want to sell options in here, okay? The risk is high, and the risk is high for a reason, because this underlying is capable of running you over, okay, like a Mack truck. So I'm actually going to take small, defined risk, probably using in-out spreads. I'll elaborate upon that more live in the chat room early inside of the trading week. One other opportunity that I'm looking for happens to deal with Caterpillar. Now, for those of you that have followed many of the trades that I've done in Caterpillar, over the months, I've done some bullish trades, I've done some bearish trades. I maintain a longer term. Again, I have a longer term bearish stance in Caterpillar. However, this most recent rally to the upside, okay, if we come right in this neighborhood of 158, that's where I'm actually going to step in. And once again, I'm going to take a short position. So I'm using this most recent bounce to re-up, okay, a short-term short position. The kind of trade I will use inside of Caterpillar, okay, would be something like an in-out spread. Again, I carry a number of positions, as you can see already in here. The type of position I would use, again, an in-out spread. That's one strike in the money, one strike out of the money. I will structure that throughout the course of this week. I want to thank everybody here for tuning in to TheoTrade each and every day and each and every weekend with these updates. Again, this coming week, strap in. Volatility is going to come back. The market, it was a little tiresome, okay? We've seen a lot of volatility from the beginning of the year. When I say it's tiresome, one of the things I wanted to point out here and kind of finish with on this video is this is exhausting, all right, to trade in this type of an environment. And all I think that we saw this last week is a little bit, if you will, is kind of the calm before the storm. Okay, traders, just like the market, gets a little bit tiresome. We stay inside of the expected move, and the funny thing, again, we land this week right smack in the middle of the range. I got to tell you, this next week, get ready to rumble, because I have a feeling volatility is going to come roaring back. Again, thanks everybody for joining us here on the Weekend Update. Have a wonderful weekend. Bye-bye.